Hello and welcome to Car Dealer Live. My name is James Batchelor and today we're looking on what has been, well, how to put it, a turbulent year, so to speak. And we're also going to be looking ahead to what we hope will be a better 2021. Now, joining me to discuss more is Auto Trader's Director, Ian Plummer, and Auto Trader Head of Strategy and Insights, Tor Lever. Hello, both.
Good morning.
Hi there.
Lovely to have the pair of you on. Now, before I task you with telling us why we should all be feeling so positive about 2021, let's look back painfully at 2020, really. Ian, could I just come to you first? Now, an overwhelming thing to have come out of this year, of the horrors of this year, has been the idea of people relying upon their cars a lot more. It's been quite an interesting thing to see, really, hasn't it? And people still wanting to purchase new ones, whether it's brand new or used. I mean, really, car ownership is far from dead, really.
It certainly feels that way. I mean, the continuing level of strong demand that we're seeing on Auto Trader, with an accelerating level of demand even in December, we're seeing 25% growth year on year of our overall audience numbers. That really does intimate, as you said, to a growing interest in car ownership and an appetite to continue buying new and used cars. It definitely feels that that's partly due to this growing focus we all have, I think, on personal space and safety in personal space, obviously COVID related. And we can see that a lot of consumers on our site right now are definitely referring to that as one of the key drivers of their continued focus on car ownership. And for many people, around 11-12% of our active buyers on Auto Trader are saying that they're specifically in the market in order to buy an additional car to avoid public transport. So it does feel that the exclusive use point as well that people are still saying is fundamentally important for their own access to a car. 84% of people want exclusive access for their own household to a car. That is really a driver of continued preference to have your own car sitting outside the driveway or the house or whatever on the road, rather than rely on any other form of either public transport, subscription service, micro-mobility even as well. All those are growing, hopefully, and positive opportunities too. But it feels that still, from all the research we do, that consumers actually still enjoy car ownership. They enjoy the freedom of owning their own car, and they actually enjoy driving. Millennials and younger audience even more so than the rest of us.
Yeah. And an odd quirk of the used car market this year has been people treating themselves, hasn't it? It's not just people buying cars as a mode of public transport for their own space, but at the top end of the market, people have thought, I'm not going on holiday this year. I'm going to treat myself to a new car. So it's been quite a weird used car market, hasn't it?
It's certainly been a weird, I'd say, new and used car market. You've seen premium brands fare particularly well. Not so much at the beginning of the pandemic, where people were probably less focused on treating themselves, clearly. But as incomes and so on remained robust for many people, clearly not all, and it's a very large number of very tough cases out there that people are contending with. But you do have to look at the overall macro numbers and realize that a lot of people have retained more of their disposable income. They've paid down some of their debt, and they are, like you say, looking to treat themselves. So used car valuations have been particularly strong. The demand has been so high. We saw sort of 25% roughly growth of audience in between those two lockdown periods of the spring and through to November, December, depending on the country and or the region. The 25% growth of interest in cars at the time when supply was pretty tight for both new and used, that clearly, from a simple economics point of view, led to increased pricing. That didn't deter buyers. We're still seeing pricing right now at around 8.4% up for like cars based on a year-on-year basis. So the continued appetite there, whether it's treating yourself or avoiding public transport, again gives us a relatively solid level of optimism as we look forward now.
Yeah, absolutely. Now, Tor, it's not just been, we haven't just learned that cars have been popular. There's also been a gargantuan step forwards in the way people actually buy cars. I mean, it's clear a digital approach to car buying is here to stay.
Yeah, I think that's been an enormous trend that, I mean, not just across automotive, but across all retail industries this year. Consumers have just got used to doing things through a screen and remotely that they just never would have expected possible. And actually, I think the thing that's interesting is that if you look at the demographics, actually even older demographics or people that might not have been so disposed to different ways of sort of more digital approaches to buying things have really moved forwards. We did a piece of research around consumer attitudes to sort of digital car buying, and what it showed was that actually, if you compare to a year ago, we've seen an increase from about 37% to 41% of consumers that say they would be willing to buy a car completely online. But actually, which I think is great, and it's good growth. But I think what's really interesting is that when you present consumers with a really viable scenario and you explain to them the assurances that they can get and how the process will work, actually that 41% jumps up to 61%. And I think what's really interesting at the moment is with the number of new players coming in and really pushing forwards their digital retailing offerings, consumers are being sort of really educated as to what's possible. And actually, I think we'll see that if we were to run that same survey in a year's time, I think we'll see that sort of level of interest just really jump as consumers are educated as to what's possible.
Yeah, and we covered all that research on the website, and those figures were startling. Really, the number of people who actually feel comfortable. You know, it's a very important word. That word comfortable, and I agree with you. I think it's just gonna get greater and greater as the years go on. Ian, there have been some big things that dealers have learned and adapted to this year, which they can use to be more successful in the years ahead, isn't there? We shouldn't just write off 2020. We should be learning from things that have happened in 2020 and applying those to the years ahead. Oh, Ian, I think you're on mute. Classic 2020, that, isn't it?
It's a shocking 2020. Sorry, a little bit of background noise from my children a minute ago, so apologies for that.
That's okay.
It is the most overused expression of 2020 that I think we'd all like to not learn well behind us as we go into 2021.
You're on mute, yeah.
That and unprecedented or new normal. But more back to your point, there are definitely some fantastic learnings that retailers can take from the year that they've just gone through. Huge challenges, and I really think we should take our hat off to them all for the progress that they've made. You can see that, I think, in the last period of lockdown at the end of this year, how resilient the numbers prove that they've been. Our estimates for the used car sales that retailers have seen in November are probably around 23-25% back on prior year. Now, if you look back to the first lockdown, if a retailer had done 23 or 25% of prior year, not 23 or 25% back, they'd have been delighted. So that shows that the progression has really happened there. Retailers have engaged with this expectation from consumers of having more digital. But equally, they've added in their own personality, the need to blend that physical and equally the digital touch points so that the consumer really gets the seamless journey that they're looking for. Not everybody right now or even in the future is going to buy their car fully online, but we do see in our research that more than 30% of people are saying they're going to do more online today than they previously did. But they still want the touch points with the retailer, particularly around the emotional side. So you can see that retailers have actually sold very effectively. During the months in between lockdowns, the market was roughly 3.5% up on an average basis over those 5 months. And they did that very often with fewer salespeople. There were still often cases where retailers had 80% or so of their teams back from furlough. So with 80% of people, they sold slightly more cars. They did that because they were able to really embrace digital, give the consumer what they wanted, but also in many cases deliver on efficiency that helps them hopefully deliver more sales. But also I think what they've retained is more margin in slightly better sales. So very positive signs to take forward.
Yeah, absolutely. Tor, I mean, with more people turning to online and doing part of the sales process online, and dealers seeing fewer customers actually spending time in the showroom, trust actually becomes, well, it gains a new level of importance here, doesn't it?
Yeah, massively. I think actually, to Ian's point, the number of people that are going to be buying a car completely remotely, completely online with sort of no support from a sort of real person as such is going to be quite a small number for a long time to come. And actually, consumers really value being able to speak to a person, being able to have someone there that they can ask their questions to, someone to almost sort of validate that they're making the right choice. But I think and to your point, that trust element, I think, is absolutely critical. But I think the role and the way in which that consumers can go through that process and can get that support is really changing. I think one of the things that was really interesting for me that came out of our research this year was around, I think it was about just over 70% of consumers said they did still want that human support and that those sort of human touch points, but actually about 40% of them were willing to have it remotely. So they didn't necessarily need to be that they needed to be stood on a forecourt and talking to that person. They might be a video call or a live chat or all those different sort of technologies. So I think it's the way in which the retailer can build trust with the consumers that are buying from them has evolved. And what we've really seen, as Ian said, is a lot of retailers embracing these new different ways of engaging with their customer base.
Yeah. Ian, we touched upon it earlier on about the different trends in the new and used car market. But one thing that's clear is for dealers to get on top of those trends, they need good quality data at their fingertips to make those business decisions, don't they?
Absolutely. I think that's one of the things that we particularly tried to focus on ourselves in the year 2020, and our own learning is that we sit on a huge sort of depth and scale of data that we really need to make sure we're sharing as widely as possible for the benefit of all of our retailer, brand, finance partners, and so on across the automotive ecosystem. So the example I quoted a minute ago around valuations, I think, is the most important here. So fundamentally, we've seen huge growth of pricing, which has helped retain sort of better margins, helped avoid any sort of write down of stock values on balance sheets for retailers, for brands and so on, and finance houses alike. It's allowed those players to actually remarket their returning vehicles. Leasing companies, finance houses have seen sort of positive numbers there. So I think that's been a real sign of strength that we focused as an industry on data that has been sort of more widely available and have not sort of succumbed to the sometimes panic driving editorial-led or opinion-led pieces that maybe say, oh, we're going to have a crash next month or whatever. When the data is saying that, we should absolutely act fast to avoid any significant impacts for such a scenario. But if we keep looking at the data, in many cases, as we've seen this year, we can not only avoid sort of panic-driven messaging and so on, and the negative impact it can have, and the kind of things we saw in the great financial crisis, where we literally did follow that kind of peak and trough kind of swing momentum that cost the industry a lot of money. But we not only avoid that, we can retain better margins and improve our balance sheet. So long may that continue, but it feels like data decision making is really something that's here to stay going forward, which I think is a solid point of progress again for the industry.
Yeah, absolutely. I couldn't agree with you more on that. Now, that's enough of 2020. Let's try and look ahead to 2021 and try and give a bit of positivity if we can at all. Now, Tor, from your perspective and from Auto Trader's perspective, I mean, what do you think the main challenges are going to be in the year ahead?
I mean, I think, as we've talked about, some of the underlying drivers that we still see in the market are still really positive. And actually, I think, as Ian talked about, our audience in December is still incredibly positive year on year. And we know that a good chunk of January's car sales sort of start the research process, etc., will already be well underway. So I actually think, to your point, to kick off on a positive note, we're actually entering the year from a demand point of view in a very positive way. And I think, obviously, when we came out of the first lockdown, we had a lot of pent-up demand that came in. But as Ian talked about earlier, we also had new pockets of demand, actually new areas of the market that we saw that were completely driven by coronavirus. And that's definitely still true. We still see a lot of people that are coming to market, to Ian's point, to avoid public transport. And I think there's a lot of people that will probably come into the new year and think, right, 2021, I'm going to get myself a new car. I'm going to, I kind of want to make some changes. I might be going back to work and I need to think about how I'm going to get to work. We actually, from some of our on-site surveys, can see that around 70% of people that used to get public transport to work have said that they don't plan to return to public transport when they do go back to work. So I think actually some of those underlying drivers of demand for the market will continue to be very positive into 2021. And for that reason, I think we're quite optimistic in terms of where we might see the sales volumes coming through. I think the dreaded B word probably can't be ignored as we're thinking about what we can expect as we move into 2021. So I think the challenges that we see are much more likely to be driven on the supply side, as both in the new market and the used market. But from a demand point of view, we're quite optimistic.
Yeah, yeah.
Just add to that.
Absolutely, yeah.
Completely agree with everything that Tor's just said. Those trends are generally sources of optimism, we believe. So fundamentally across the new and used car market, we look at probably 6 trends that we think are going to sort of be macro drivers of the year ahead. You know, the B word that Tor just mentioned, clearly, if it goes wrong, it has huge impacts for the new car market because it will substantially price the added price factor into the cars themselves, both on the tariff and the likely effect of exchange rates. But equally, that could have a positive impact on used cars as the continuing cycle of finance renewals and so on encourages people potentially to get a new next new car, might be a used one this time. So slightly increasing demand, but probably increasing used car pricing as well. So challenging for new cars, but not so much for used. You've got the COVID factor. You could look at that 2 ways. Clearly, if we have significant lockdowns, that's hugely challenging. We've found a way to battle through those. But there is an element of confidence in terms of outlook, which we haven't even factored into the sort of simulations we've done on volumes and so on, where there is an element of light at the end of the tunnel, which could boost confidence and therefore appetite for car buying. Electric is the third theme. I think you've got a huge amount of great new cars that have come into the market this year, a whole host of additional ones coming next year. Generally speaking, in my experience, when you add new exciting models to a market, and we know this huge interest in electric is only growing, we can perhaps come back to that later, that spurs demand. Equally, the fourth point probably be the amount of activity in the market. You've covered today the acquisition by Cazoo of Drover. That's an exciting movement in the market. Cazoo is an example, Cinch, Kazan, of many others that are generating a lot of marketing expenditure, probably around 4 times the amount of used car focused marketing expenditure this year than we'd see in normal years. That's probably generating positive interest in car buying. We're lucky enough to have a very high proportion, well into the 90% of organic traffic, and we're also seeing benefits from that on our own side, even without sort of participating in that high level spend. But then you've got 2 other points that are probably lesser in terms of impact. Transition to an agency model, which we think probably is impacting the market slightly negatively, but more likely in 2022 than 21. And mobility services, the likes of Drover, which could have an impact positively, but probably, in our opinion, relatively small. And again, there, I think that's something we'd err on the side of optimism rather than pessimism when we analyze that one, because our research shows that consumers generally see mobility services as an incremental opportunity rather than a substitutional one. They still want access to a car. Some people want access to an additional car or a mobility service for certain needs rather than replacing an exclusive access car.
Yeah, yeah. And I also think it's fair to say it's something that we've seen this year, people returning to the used car market, buying cars because of fears of public transport. Once you've got people into a car, it's quite difficult to prise the keys away from them, isn't it? And actually say, well, you know, now you're going to have to go back to public transport. So there are lots of, like you just touched upon there, lots of interesting trends and things that are filtering into the market, which, yeah, 2021's got the potential to be a very interesting year indeed. Let's just stick with electric, because you mentioned electric there, Ian. Now, we've spoken, the last time we spoke was before the big 2030 announcement on the ban of petrols and diesels. Now, that's just 9 years away. You know, it sounds a long time away, but it's not in the world of automotive. What are your overall feelings about it? And is it a tough deadline, or is it one that we've got to get to grips with and get on with achieving?
For sure, it's a tough deadline. The industry is hugely challenged by the deadline of 2030. I think it's already hugely challenged also by the CO2 regulations that are in place now. We're expecting those regulations to be continued in the UK next year, outside of the EU, of course, but with a specific UK fleet size target to achieve, rather than our numbers being in the overall EU ones. That alone actually is a huge driver of change and pushes the manufacturers obviously to get their EVs out there, because they're counting double in the quota or the calculation that's used to actually work out the eligibility of a manufacturer to either hit or not the overall target and be fined or not. So the EVs that are coming through are definitely a result of that regulatory pressure that's already existing, as well as obviously the increased pace that Boris Johnson's announcements have added to things. We would expect that by 2024, maybe 2025 at the latest, if we're to achieve the 2030 target, that we would need to see EVs actually exceed the sales of ICE vehicles. Now, that is quite a challenge when you look at where they're coming from. Typically, on a cumulative basis, we're still in the single digits for EVs in terms of market share. The decline of diesel is quite rapid. But so far, petrol is holding very firm and is benefiting from most of that decline of diesel, rather than it being a shift into AFVs. So it feels like a huge shift forward, but nonetheless, we are seeing very positive levels of consumer intent and levels of interest that are growing strongly just now.
Yeah, yeah. And Tor, I mean, we were just talking about the new car market there. And we're going to obviously, more people are going to be buying electric because they're going to be persuaded to and going to have to. But in the used market, at the precise moment in time, it's a very different picture, isn't it? People are a little bit reluctant to go for an AFV. They're turning to things they know or that they're familiar with, like petrols and diesels.
Yeah, I think that's definitely true. I think the pace of sort of technological change, obviously, within the electric market has been incredibly rapid. So see the difference between buying a brand new electric car and one that's 3 years old in terms of the technology that you're getting is quite significant. However, that's not to say that we don't think there's a significant opportunity in the used car market for electric. We've seen supply of electric cars more than 5 years old has actually more than doubled on our platform, as has the level of consumer, and the level of consumer interest has also grown significantly. So I think there's definitely a market there to be had. I think because of the differences in terms of things like battery life and the sort of range, etc., the use cases as you get to some of those older electric cars are probably slightly different, but I think there's definitely still a market there to be had. I think the leasing market more broadly for both new and used, we would see as a big enabler for electric vehicles. I think it's a way of giving consumers, because of that rate of technological change, giving consumers the ability to sort of move with it and try new cars as they come out. But I think as sort of Ian said, what's come out loud and clear, I think throughout this year actually, has been the level of consumer focus on the environment and the concern that consumers have for the environment. From our research that we run, it's about 92%, I think, of consumers said they are now concerned about the impact of cars on the environment, and about half are a lot more concerned than they were just a couple of years ago. So I think that macro context is meaning that consumers are definitely thinking differently. But the biggest barrier, as we all know, comes down to cost. So there's definitely something for the industry to do in terms of bringing the cost of electric vehicles more in line with their ICE counterparts. But I think also for the government to do in terms of thinking about what support they can put in place to actually help the industry get to where it needs to get to.
Yeah.
Well, add to that, James, the interest is definitely there. We touched on the increased interest in the recent times after the announcement that was made by Boris Johnson to accelerate the challenge of ending ICE sales by 2030. But on the day of that announcement, we saw a doubling, as Tor just mentioned, of leads and interest in EVs just overnight. But in the month of November overall, we saw an increase of more than 420% in the number of new EV leads. So a huge growth of interest. And equally, when we survey people on site to ask them what they're considering buying, we saw that 19% of people after the announcement were suggesting that they were considering buying an EV or a hybrid. And actually, half of that roughly were people who are considering now only because of the announcement. So the announcement clearly has spurred interest even further. The gap we've got to bridge is the cost one. Though unfortunately, the government hasn't sort of put substance behind the announcement by actually accelerating or increasing the incentives. And probably more needs to be done also in infrastructure. Those are the two key points that always come back from consumers in terms of the blockers. But it is encouraging that the price of EVs looks set to decline as scale increases and manufacturers are able to reduce their cost base. Particularly, that's the case for the actual core cost that they have to accommodate, which is the cost of the battery pack itself. So if they're able to increase the scale, if that interest of initial buyers is satisfied and supply can match that demand, then we can see a path where costs are reduced so that we can add in more proper sort of transaction opportunity for people who otherwise couldn't make the slightly higher cost jump that others today are prepared to make, and that hopefully will fuel that opportunity further down the road.
Yeah, absolutely. And it's definitely going to be an interesting year ahead. It's going to be an interesting few years ahead for all of us, of course. But for today, I'm afraid we're going to have to call it a day, I'm afraid. But thank you both for coming on. Some fascinating insight there. And you've made me feel a lot more positive as well. So I feel very happy. So thanks very much for coming on.
Great. Thank you, James.
Thank you.
So that's it for today's Car Dealer Live. But we'll be back very soon. But until then, thanks very much for watching, and bye-bye.